Good morning. I don't think we should be surprised, simply because of the extended period of uninterrupted positive returns that we've seen over the last few months and quarters. We also need to take into consideration the valuations, which we knew were quite extensive, particularly in the technology sector. Furthermore, two further items. Number one, that it is a holiday period. And as a result, there tends to be some more volatility around those periods of slightly less, but people being less in the office or presence. And finally, some profit taking and overall risk reduction. So we're not particularly concerned about that. In terms of the views that we've had, we've been neutral on NASDAQ and the S&P because of the underlying valuation components. But we have had a preference for healthcare and consumer discretionary, the slightly more defensive side of the U.S. equity market.
You say there's a fair degree of profit taking in there, and I definitely take that point. The bigger question is, and that's something that we've seen filtering through to the markets of the last 2 weeks, is it more than that? Is it sort of a fatigue with the overall tech sector, which is so highly valued, and that's why we've seen this big rotation going into small caps?
I think that's a very important question. We were talking about that this morning. We'll be looking into it in much more detail next week when we have our sort of monthly scorecard and analysis meetings. However, we don't see yet anything on the fundamental side or the geopolitical angle which would adversely impact the U.S. economy or the broader sentiment, if you like, around the equity markets and the financial markets. So we think this is more of a profit-taking correction, giving some opportunity for adjusting valuations from those extensive levels. But we don't necessarily think that this is a broader turn for a recession in the U.S. driven with a significant correction in the major equity markets.
You say you've stayed out of the NASDAQ and the S&P 500 for valuation reasons. You have become a lot more selective. You like healthcare in the U.S., consumer discretionary. Are you not worried about missing a further leg to the upside when it comes to tech?
We had been positive not on the tech, but on the communication services from February of 23. So we turned positive in February 23 because the market was very much doom and gloom about a U.S. recession, and we did not agree with the market. We were more constructive on the U.S. outlook because inflation was coming off, because the Fed was there looking into sort of taking action in terms of the financial and banking mini crisis. So we were not concerned about the recession. But it was in March of this year that we reduced that view on the communication services sector. Risk of missing out on the upside, yes, there is that element of risk, but I think that will become probably a little bit more clear next week when we have a proper look into our decision-making process. But for now, we would not be rushing into that. We would rather wait and see if there is some further correction to be had, even though we don't think this is structural yet.